Good evening, good evening, good evening. This is Sayana Reed, aka DC of DC Virtual Services Incorporated, headquartered in Tennessee. Today we are going to do a quick video on how to, like, basically the quick start on personal finance. We're gonna go over what a financial statement is, and so on and so forth. I wanted to do this. We actually was going to do the I quadrant today, but I wanted to backtrack a little bit because we didn't touch base on keeping your finances actually in check. So when you start accruing finances and extra finances, you won't just like basically lose the finances as you gain more for more of a financial stability. The key is to be able to gain more income in order to be able to invest. So I wanted to make day 7 actually this actual topic. Tomorrow we will go over the investing part and so on and so forth. But let's go into actually maintaining the income that we have, increasing the income, and knowing where the income is actually coming from. And so that's what we're going to do quickly today. This is going to be a quick video. It's not going to be anything drawn out, but I do want to give you the actual insight on how to move forward in increasing your finances and make sure that it's continued to grow. So personal finance is a term that covers managing your money as well as saving and investing. It encompasses budgeting, banking, insurance, mortgages, investments, retirement planning, and tax and estate planning, according to Investopedia. So personal finance encompasses everything: budgeting, banking, insurance, mortgages, as well as investing. So if you don't know anything about personal finances, it's going to be a little more difficult to get into the investing part, because you do have to invest the finances that you get from either your job or your business. So the first step that you would like to do is to devise a budget. A budget is essential to living within your means and saving enough to meet long-term goals such as investing. There is a 50-30-20 rule. Basically, it's a budgeting method that offers a great framework. So 50% of your take-home pay or your net income that's after taxes will go to living essentials such as rent, mortgage, utilities, groceries, and so on and so forth. 30% will go to discretionary expenses such as dining out, shopping for clothes, anything like entertainment, and so on and so forth. Giving to charity will go here as well. And 20% will go towards the future, such as paying down debt or saving for retirement or emergencies. So 20%, you want to have at least 20 to 30% going into investing, 20% as the minimal, 30% for your entertainment expenses, and so on and so forth. And then the next step you would do as far as your personal finance is to create an emergency fund. It is important to pay yourself first to ensure money is set aside for unexpected expenses such as medical bills, a big car repair, day-to-day expenses if you're laid off, and plus more. 3 to 6 months worth of living expenses is a deal safety net. Financial experts generally recommend putting away 20% of your paycheck each month. Once you fill up your emergency fund, don't stop. You continually grow your emergency fund in order to make sure you have a cushion if something bad was to happen or something unexpected was to happen. So the next step, so we got devise a budget. So first, the first step in a quick start of personal finance is devising a budget. Then we're going to create an emergency fund. A lot of times Americans don't have at least $1,000 in their bank account for day-to-day for emergencies, and $1,000 is a good start. In order to have in your emergency fund, you continue to let it grow in order to be 3 to 6 months worth of your living expenses. So the next thing that you would do is put 20% towards your financial goals, such as retirement or a down payment or a home, or of course for investing. So you want to take at least 20% of what your net income after taxes and actually invest. And as you invest, the money that you invest is not going to be taxed, whereas your regular income will be taxed. The next step is limit debt. So just to keep debt from getting out of hand, don't spend too much than you earn. So if you earn a certain amount, don't go over that because it'll put you further in debt. The next step is to use your credit card wisely. Credit cards can be a debt trap, right? So even with small credit cards, secured credit cards, it can put you in a world of trouble. So you got to be wise in using your credit card. So let's say you get a credit card, and it could be a secured credit card. With secured credit card, you put $200 on it, things of that nature, on the card in order to use it. Just pay for your gas, right? You'll pay for your gas on the credit card, and then you'll turn around and pay it immediately. That's gonna jump your credit up higher than what it is here. And I'm just briefly going over this information. If you want this full pamphlet, I can send it to you, and it's going to be in a Google Classroom. So you want to limit that. You don't want to lease anything, such as any kind of property, house, car, or anything like that. And then you want to use your credit cards wisely. You want to keep your credit card credit utilization ratio to a minimum, which is below 30%. You don't want it to go over 30% because it will hurt your credit score. And again, your credit score is very important, as well as having cash on hand, right? So basically, once you manage your credit card wisely, you do want to monitor your credit score. The credit cards is the main vehicle which your credit score is built and maintained. So you want to keep an eye on your credit score and be able to look for your FICO score. Excuse me. So your FICO score will include your payment history, which is 35%, the amount owed, which is 30%, the length of your credit history, which is 15%, the credit mix, which is 10%, and new credit, which is 10% as well. FICO scores is calculated between 300 and 850. 300 is being poor credit. 850 is being more than excellent credit. So exceptional credit is 800 to 850. Very good is 740 to 799. Good is 670 to 739. Fair to 580 to 669. And very poor is 300 to 579. So more, basically your credit is basically when you pay twice, right? So when you get your credit, based on your social security number, it's your account number. You got your social security number, that's the account number on the back of the card with that red information, that's the account number. And depending on your credit, basically your credit is going to represent whether you can pay this twice. So when you get a credit card, let's say you get some furniture, right, for $1,500. The furniture is already paid for by the bank. You're just going to be able to pay, you're going to pay the bank back, basically. So to get this furniture, so it basically is being paid twice. So based on your credit is based on how much your interest is going to be. To pay bills, set up direct debiting where it's possible, so you won't miss a payment. And then you always want to check the big three major credit value, such as Equifax, Experian, and TransUnion. You can get your free credit report at freecreditreport.com. You always want to make sure it's that actual free credit report at freeannualcreditreport.com. So this is the actual website. So the only source for free credit reports authorized by the federal law. You want to be able to check your credit score, and you can get this once a year. You request your credit report, ask you a few questions, and give you all three credit reports. Sometimes if you miss a question or something like that, or something was locked towards your credit, it may not give you all of them, but the ones that you don't get, you can call them directly and try to get your credit report. I'm trying to see if there's anything else here. I can't even find where I was at. Okay. Let me move that. Okay. So this is the gist of your credit report here. In the works cited, I always cite my work is Investopedia. So having the correct finance is good. So having enough finances is perfect, but you just want to make sure that you could be able to have the income coming in and staying in your household, right? So this is a personal financial statement here. Excuse me. You can actually find this. Let me go back. You can actually find this on the Rich Dad website, richdad.com/resources/tools. It's called the Personal Finance Calculator. So you'll click on that. And once you click on that, it's going to bring you to an Excel profile. And you'll be able to fill in this information, right? And it'll be able to calculate it for you. And things of that nature. So this is a good start to find out what you have, what's your assets and your liabilities. And it's going to tell you all this information once you input that information in. Each person is different. So I would try to do this when you first start, in a personal finance journey, and then when you add income, I would add the income, when you add the income, when you add income to your household, then you could, do this new personal finance financial statement, so you'll know what's coming in, what's going out, and what's assets and what's liabilities. So that's the gist of that. I wanted just to quickly go over the personal finance portion. Again, I'm not a professional CPA or anything like that. So you want to, more information, consult a personal, CPA, tax person, or someone that has to do with, managing your assets and things of that nature. This is just, to give you a general idea of what you need to do and how to move forward. If you're watching this on Bigo Live, thank you so much. We're actually tomorrow. I thought it was actually 10 days, but it was actually 8 days. So tomorrow will be the last day. Friday we'll probably do some little personal development, but tomorrow will be the official last day of the Money Mania 2022. If you're watching this on another social media platform such as YouTube, thank you so much. Feel free to like, share, and subscribe, and comment below what you liked about the whole, series of the Cash Flow Quadrant by Robert Kiyosaki. And I will see y'all tomorrow. We'll be talking about the investing portion and how to move forward and how to get, free stocks, how to get $10 worth of Bitcoin and so on and so forth. So tomorrow is going to be a treat. And then Friday is going to be a chill day. We're going to be done on Thursday. So thank y'all so much. Peace.